No clue about investing? Here is how to build a winning portfolio from scratch. I, Profitable Fombi here. Maybe you've not heard about stocks before, or probably you've been hearing and you feel like, maybe it's not for you, or maybe it's not my thing, all of that. I don't have so much money, and you have so much beliefs, wrong beliefs around it. Then this video is for you. Stock investing is not anything hard. It's not something, it is not rocket science. It's not something you cannot do yourself. Don't worry, just follow me through these 10 steps on how to build a winning portfolio. The first thing to do is define your goal. Define your goal. Before you buy any stock at all, before you invest in any shares at all, define your why. Why are you going into stock investing? Is the purpose for extra income or is the purpose for growth? Are you there for the long term? Define your why first. Define this particular money that I'm investing. When do I need it? Am I needing it in the next 2 years, 3 years, 10 years? Define your goal. Like be particular about why you need to invest, how much you're investing, and your time horizon. So sit down before you start investing, define why you need to invest, how much are you to invest, when you need the money, and how long you are willing to invest. Your goal can be as simple as I want to build a 1 million stock portfolio in 2 years, or I want to build a 5 million stock portfolio in 3 years, whatever. Define your goal. What exactly are you looking to achieve through investing? After defining your goal, also decide how much are you willing to invest consistently. Be honest with yourself. Sit down. Okay, this is my income. This is how much I can spare. This is how much I can risk in the stock market. Decide, okay, I can do this maybe 10,000 naira in a month. I can do 50,000 naira in a month. I can do 500,000 naira in a month. No amount is actually too small. Decide how much I'm willing to invest consistently and conveniently. And conveniently. If it's 10,000 naira you have monthly, that's fine. Just be committed to it. What you just do is decide on maybe 2 to 3 stocks that you're going to put your money in every month, and just keep putting that money, keep buying consistently, buy each month, month in, month out. Just allow the money sit on that stock. And if you have more money, maybe you have 100K or more, 200K, you can build a more diversified portfolio. You can do more than 2, 3 stocks. You can do four, you can do five, depending on your goals. After you've decided your goals, you decided how much you're ready to put in on a monthly basis, the third thing for you to do is to choose a stockbroker or an app. Okay, you can either choose to buy through an app like Bamboo, um, Chaka, and the rest, or you can choose to invest directly with a NGX stockbroker like Meristem, like Cardinal Stone, and a lot more others. So sit down, choose who you want to invest your money through. So all of these stockbrokers and apps are just middlemen between you and the stock market. Before you choose any medium, whether the stockbrokers or the app, make sure that you do your due diligence. Number one, check if they are registered with SEC. Check if they are registered with SEC. No investment platform should get money from you if they are not registered with SEC. Yes, I remember. I heard now that SEC has a USSD code which you can use to check if an investment platform is genuine or not. So any investment platform that is not registered with SEC, it's a no-no. They cannot take deposit from you. So using that USSD, you can check if that particular platform asking you for money is actually registered with them. The fourth thing you're going to do is to pick your stock mix. Remember that you're just investing 10,000 naira and you have just maybe like 2 to 3 stocks to play around. So what you just do is pick your stock mix, pick across different sectors, pick quality stocks across different sectors. You can choose from consumer goods such as Nestle and Dangote Sugar. You can choose telecoms like MTN, like Airtel. You can choose from banking like GTCO, Zenith, Fidelity, and a whole lot of others. So choose your stock mix. Okay, I'm investing 10,000 naira. Pick companies across board. And what our advice as a beginner investor is pick market leaders. Pick market leaders. If you're investing for the first time, you're not used to the game, the best thing is pick market leaders. Okay, check across board the ones that are leading the industry in all of these sectors and invest with them. The fifth thing I will ask you to do is check these three things, three basic things before you invest in any stock at all. Don't be in an hurry. Just check these three things. In fact, it will take you less than 5 minutes to determine all of these things. Don't worry, you don't have to be an accountant. So check these three things, and these are the three things. Number one, are they making profit consistently? Don't worry, once you open any financial statement, just take your eyes to the income statement. And once you get to the income statement, just run through, go towards the downside, check profit for the year. So that is how I'm able to determine if they're making profit consistently. Check the profit for that period and previous period. Are they consistently making profit? Of course, when a company is making profit, that means their expenses is lower than their income. Then two, if you're a dividend investor, you're investing for the sake of any dividend, any extra income. Another thing you have to check is their dividend growth. Is their dividend growing consistently? If they pay dividend year in, year out, then there should be a steady increase in their dividend year on to year, maybe from like in the past 5 years, in the last 3 years, in the last 2 years, you should be able to see that yes, their dividend is growing, particularly if you are there for the dividend. Then number three, low PE ratio. I wish I'm not going through all of this accounting terms for you, but it's easy. Don't worry. I promise you it's easy. PE ratio is just evaluation tool. It's just evaluation to know if you are buying at an expensive price or you're buying cheaply. A low P ratio is always better. Like, okay, P ratio is just market price over EPS, earnings per share. What you just need to confirm is this stock price overpriced? Like, is it too expensive? Just like now, if you go to the regular market, your local store, you know that um you get things maybe like your groceries cheaply. Now when you get to all these high-end supermarkets, like okay, if you are going to an high-end supermarket, you know that yes, whatever you are buying in your local market is going to be a bit more expensive. The same product, well, yes, quite right, but there's going to be a premium on that. So what you just want to confirm with your P ratio is this stock actually cheap or am I buying it very expensive? That's all. And if you don't have time for all of this wahala, there are platforms such as investing.com that actually gives you access to this information like their PE ratio. So what you just do is compare that PE ratio with peers. Okay, if you are choosing to buy from like banking now, all you have to do is check if you are choosing to buy, for example, GTCO now, what you just need to do is check GTCO's PE ratio, check it with all of the other banks. If it's within the range, then it is fairly priced. But if it is low, that means you are buying GTCO cheaply at that point. And if it is higher than the peers, it means that you are buying an expensive stock at that point. So let me go through the three things again. Number one, check their profitability. Are they steadily making profit? You don't want to put your money where your money will not be put to good use. No. Then two, are they paying dividend consistently too? Is their dividend pattern growing? Check their dividend history. Then three, check their P ratio. And remember, like I said, you need to buy low. So if their P ratio is low or on the average, it is good for you. But if it is high, you are paying too much for that stock. Then the sixth thing you should do is invest regularly. Invest regularly. See, you don't have to have 1 million naira. You don't have to have 1 million naira. You can start with as little as 10,000 naira. But in putting there 10,000 naira consistently, that's when you're going to see results. Put in month in, month out in the stocks you have chosen. Consistently put that money there. Do dollar cost averaging. Okay, in our case now, maybe naira stock averaging. Invest regularly. You don't know what that your 10,000 to 20,000 naira can do. Money at the end of the day. Before you know it, you are building a million, 2 million portfolio from that. So invest regularly. Don't be discouraged. Your money may be small, but do it consistently. Do it consistently. And the seventh thing you should do is to monitor. Yes, monitor, but don't obsess over it. When I mean don't obsess over it, don't go and be checking daily. Check monthly, check quarterly, depending on your goals and whatever you've mapped out for yourself. But please, not daily, not hourly. Don't go and be checking every now and then. Please don't do that. And watch out for earnings releases and dividend declaration. Very important. Like July now, the entirety of this July is for Q2 results. Yeah, Q2 results have been coming in, and some have been very impressive and others no. So what you just do is make sure that you are consistently checking these earnings reports and declarations. Please avoid panic selling when market dips. Yeah, that time comes. So yeah, this thing is like a graph. You know that graph we used to draw in secondary school, like goes up, down. It's like wave, you understand? It's like wave. So there are times where it will go down. And please don't panic sell during that period. No. Stick to your goals. Don't panic sell during that period. That period is not for you to sell. No. Not for you to sell. So have in the back of your mind that there'll be times that the market will go down. Maybe lower than the amount you bought it. But please don't panic sell at that point. If you choose a good stock, a good company, you're investing with a very good company, at the end of the day, it will pay off. Then the eighth thing you should do is reinvest your dividend. Don't spend it all. Yeah, okay, maybe you want to have that feel of, let me just enjoy my money now. Yeah, you can take out of this spend. But once you are paid dividend, our advice is that you invest. That gives you good faster. Then how the compounding, the compounding is very good for you, good for your portfolio. So if you can do, reinvest all of your dividend, and if not, please don't spend everything. Put a portion back. Put a portion back. And even these companies that are not paying dividends, you forgotten that they are not paying you all the profit that they made too. They're also taking back some to the business, to invest in the business. They're just paying you a portion. So be like them. That's the strategy to grow. Just take a portion of your million spend and invest the remaining. The next thing I'm going to be saying is avoid these beginner mistakes. I'm going to be mentioning them now. Avoid these beginner mistakes. One, don't follow hype. Don't follow hype. Don't go on Twitter and start checking what people are saying. Don't follow hype. It is not BB Niger. Don't follow hype. See, I've done your evaluation already. You have made your analysis. Please stick to what you are sure of. Don't follow hype. Don't follow people blindly. No. Don't follow people blindly. I don't go for hyped stocks. No, please don't do that. In these days of influencers, in fact, people can influence even stocks, if I can put it that way. So please don't follow hyped stocks. You just stick to what you know. Stick to your goals, stick to your analysis, and at the end of the day to pay. Then don't sell too early. At the beginning of you defining your goal, probably you have defined that okay, when this is so price get to this, I'm going to take profit. Like I know some people that GT go at a very good price, maybe at when it was like um maybe 40, 50 thereabout, and their goal was once their investment, the market price doubles, and it doubled like maybe like last week or 2 weeks ago, it's crossed 200 mark. So at that point, that was their own profit taking point. So once you have a goal, maybe to sell at a particular point, or when you are sure that okay, this is time to get off the market, yeah, really sure this is time to get off the market, then you can get off. But please don't sell out of panic, or like I said, because people have said something on Twitter, or one thing is trending one way or the other, then you sell. I remember one time during this year that GTCO was in the news for the bad thing. Some people were probably withdrawing their money, closing their account, and all of that. And it's all of this that GTCO reached 100. It's all of this mix. Just maybe a few weeks ago, GTCO has reached 100 naira. It has crossed 100 naira as at maybe last week. So what I'm trying to tell you now is that don't listen to hype, stick to your goals. If at that point, yeah, the thing tanked a bit, it dipped a bit. Yeah, the stock dipped a bit at that point when the buzz was all over social media about GTCO and all of that. But that gave people a reason to enter. It gave space, it gave discount for people to investors who had more positions. And look at now, at that position they had, look at what GTCO is saying now. It went on as far as 100, it crossed 100. So what I'm trying to say is that Twitter is not your financial analyst. You understand? Twitter is not your financial analyst. Then stick to your goals. Stick to your goals. Don't follow hype. Don't chase news too much. Don't hunt news too much. Stick to what you already planned out. Stick to what you already planned out. And don't copy others blindly. Our goals are different. I may be in for the short term. I may just want to be here for a few months and maybe just take out my profit. Maybe when I have to capital gain, I'm just like, okay, I think I'm good. I can leave the market now. I may just be in for like 3 months. And you that are going in for years, you are here for the long term, you are copying my style. No, please don't copy others blindly. Follow your plan. Either the plan you have mapped out for yourself or the one expert have analyzed for you. Then number 10, keep learning. You have to keep learning. Oh. You have to keep learning. Follow NGX News. Read financial literacy books. Learn to use platforms such as TradingView, Investing.com, NGX. Learn to use all of these platforms. And also now, follow Profitable for me, of course. So let's get to the comments. Yeah, if you have any question, I'm waiting for you in the comments. If you'd like to share your experience with us, let us hear you out in the comments. Yes, we can learn from each other. Thank you.